All right, good afternoon. It's Saturday, December 7th, and this is Joe Henches with Beyond the Chart, where we help traders learn more about the markets, make better trades, and be successful. Good afternoon, everyone. Let's go ahead and get started. We're going to take a look at the markets, some key indicators, and take a look at Apple. Hopefully we have time to get all that in. So let's go ahead and take a look. We're going to start off with I've got the Dow Weekly. I want to do the daily first. We had a big day on Friday, up 198 points because of the jobs market, the jobs report that was very bullish. Although, as people start to look underneath the covers at that report, I think they're starting to find out some things that maybe isn't quite as good as they thought it was. So it'll be interesting to see how this plays out Monday, Tuesday of next week. I'm still not convinced that. I mean, we'll see whether this is a bounce, just a little bear market rally here. Is it going to be something like what we had over here in early June, or whether this is going to go and push to new highs? I mean, I don't know. I mean, we'll have to just watch and see. I think there's a real decent chance that we topped out on November 29th, and that we're into a downtrend. But we'll find out here soon enough. Let's take a look at the Dow Weekly Chart that I've got. One of the things I wanted to point out is we've got some major divergences in here. This is on a weekly basis. Okay, this has been going on from the peak on the RSI. This is a 10-bar RSI for 34 weeks. Okay, when you look back in 2011, it went on for 10 weeks. Then from peak to low tick, from high print to low print, minus 19.2%. Okay. 2007, when it went from the high, the divergence that occurred, 19 weeks that divergence occurred, and then we had a 54.4% sell-off from peak to trough. And the year 2000, 1999 into the year 2000, 36 weeks of a peak in here, a divergence of 36 weeks, and then of course you had the big move down, 38.7% into 2002, the sell-off. That was the first major wave down. And this has occurred several times. Back here, 1990, decent divergence here, 45 weeks. So you really don't know how long it's going to go on and what kind of move down that you're going to get. The thing is, it's a little bit of a warning sign. Okay, this is when Saddam Hussein invaded Kuwait, and this is the 1987 crash. You had 26 weeks of divergence that was occurring from the peak in the RSI to the next higher, lower peak, and then you had a 40.9% drop fairly rapidly. So anyway, those are some examples. Just wanted to kind of show that we've got something going on right now. Not sure how it's going to play out, but we need, it's a warning sign. Okay, S&P 500, similar type look to the Dow, and we've talked about the fact that we've got some divergences going on a daily basis. The New York Composite, I just really kind of saw this today. I'm not sure why I didn't see it before, but it does look like a rising wedge in the New York Composite, and it does look like we broke out of that. And this is a little bit of a pullback. Yes, the 10 has gone below the 20 right now. It's done that before. So, it'll be interesting to see. Typically in a rising wedge, like I've said, the rising wedge is bearish. It can be the final move, or it can be a rally in a bear market like it's doing in Apple, which we'll talk about in a minute. What this should do in a typical fashion is rapidly go to the bottom of the wedge, which would, interestingly enough, coincide with the 200-day simple moving average right in here. The Nasdaq is the next one we want to take a look at. The Nasdaq continues to push high. We've got a little bit of it's a hanging man, I guess they call it, in terms of the actual candlestick formation here. Somewhat bearish, but I don't know that I rely on it all the time. I've seen them before where, yeah, you get it, and then it still continues pushing upward. But the interesting thing on a weekly basis, we're getting two dojis. 2 out of 3 of the last weeks had these dojis that are called dragonfly dojis. And they are somewhat bearish, but you notice you still pushed up last week after it. But the fact that we're getting two in the last 3 weeks kind of almost makes you take notice a little bit, where you kind of want, okay, what's going on now? The Nasdaq is heavily weighted by Apple. Okay, Apple's got 8% of the Nasdaq in terms of weighting. So if Apple's getting ready to turn back down, like I think it is, then that's going to help put downward pressure on the Nasdaq. We'll take a look at that in a minute. Now I want to take a look at the three amigos, I call them, the three ETFs, for kind of a sense of pulse in the market. What's going on? Is it things in sync? The home builders has pulled back. Okay, thought we were getting a breakout out of this triangle. It came up, kind of hit the resistance from this up here, and it's pulled back down into here, not really showing us much of anything except for the fact that it's not going anywhere. XLF, the financial indice, it is broken out, pulled back. Again, not doing a whole lot of anything. Hasn't pulled back quite as much as the home builders. And the other one is the Semiconductor Etf. It's popped up on Friday, kind of broke out of this congestion, so it'll be interesting to see, is that just a fake out move, or are we going somewhere? We've got the 10 above the 20, and they seem to be aligned here in terms of the moving averages. So not sure if the semiconductors are signaling a new move or not. And we'll have to watch them closely. I mean, it right now looks good for the semiconductors. So take a look at the VIX real quick. Where is the VIX? Probably on the next page. Here it is. Okay, it pulled back to the 10, but you notice it's done that before. Okay, in this rally move here, it pulled back. In this rally move here, it pulled back, rallied, pulled back, rallied. Okay, so I'm still expecting this to rally, so I'm still expecting the sell-off to continue, because I just don't see this VIX topping out down here this low. It never did in the last 4 moves. It topped out much higher. Short-term trading index, there it is. It's not really showing us anything new. Here's where I talked about this before, where the 10-day moving average of the exponential moving average of it was very low here on the 15th, lowest of the year. It's back up in here. It's not really giving us another signal at this point. I think that's it on those indicators. So now I want to take a look at, did we look at the high-low? I don't think we did. Let me take a look at that real quick. Yeah, the high-low. Okay, so now the high-low index, we had 41 more new highs than we had new lows on Friday. So we got a little bit of a bounce back up here, but we are still trending downward. And this trend line that I had drawn, I extended it out here because I wanted to just see, do we get a bounce up that far or what? So it'll be interesting to see. Right now, we've still got this divergence that was in place, kind of setting up the move to the downside. And are we going to get more down like this and more moves down like this in the May-June sell-off or the August sell-off? So that's what we're kind of watching for. Okay, let's take a look at Apple, because I had talked about Apple a couple of times. Back on the November 27th, I think is the first time I talked about it, and I said I think it's going to get to 573. I wrote that number on the chart. I'll refer you back to that post on the 27th. So now the interesting thing about it now is it closed below the low of the last 2 days. Now a lot of times when you get outside the Keltner channel like this and you're traveling outside here, that's a nice stop to use to exit out, and sometimes even just to close below the previous day low to get you out. So that to me is kind of signaling, okay, that's a pretty decent little sell-off and close down here. And the fact that it's moved up to this trend line, and this swing, where did I get 573? 573 is because the distance of this move, A, equals C at 573. Okay, so there's 2 legs up, and it's an A, B, C correction. And I think this is here's wave A, move down. This is a zigzag correction. Here's A, here's B, and we're now about to get C. That's what I think is going to play out, so that's where we're looking for. That's about it. We'll talk to you tomorrow. This has been Joe for Beyond the Chart. Have a great Sunday.